So good morning, everyone, and welcome to this webinar organized by ESMA, today on AI adoption and trends in securities markets, EU evidence. So please be informed that the webinar will be recorded. You are all muted and with cameras disabled by default. However, you will be able to raise any questions you may have using the Q&A box. So feel free to use it after the presentation. So now I will give the floor to Claudia Guagliano.
Thank you very much, Cecily, and welcome to all of you also from my side to this webinar on AI adoptions and trends in securities markets, EU evidence. My name is Claudia Guagliano, and I'm the head of Consumer Sustainability and Innovation Analysis Unit at ESMA. Today, we will discuss our latest risk analysis article on AI in securities markets. This work builds on our earlier analysis on artificial intelligence in new securities markets, including our first comprehensive analysis of AI and use cases in 2023, and also our 2025 assessment of AI adoption and exposures in investment funds. This article today differs from our earlier work in that it combines and updates our previous analysis with the results of a dedicated survey that we conducted in summer 2025 in cooperation with 15 EU national competent authorities. The survey gathered input from a broad range of firms across the securities market sectors on their AI investment strategies, concrete use cases, perceived benefits and risk, infrastructures dependencies, and regulatory considerations. It therefore provides a comprehensive and timely pictures on how AI is being integrated into EU securities markets. We observe that AI is increasingly embedded in firms' operational and strategic frameworks. At the same time, adoption remains uneven. Larger entities are generally leading the way, integrating AI into internal processes and progressively more core business functions. Smaller firms tend to move more cautiously, reflecting differences in resources, data capabilities, and access to specialized expertise. Overall, however, the expectations point to a continued growth in AI investment. In terms of use cases, what we observe is that generative AI tools are mostly aimed at improving operational efficiency. AI systems typically operate with a low level of autonomy, where human oversight remains central. At the same time, some firms use AI models in more specific applications, such as portfolio management, trading, and certain client-facing tools. These developments offer important opportunities for efficiency gains, productivity, and potential revenue growth, but they also introduce new risks, including model and data risk, governance, and explainability challenges, and increasing reliance on third-party providers. Against this backdrop, the article highlights the need for continued monitoring within ESMA remit. As AI adoption deepens, it will be essential to ensure that innovation is accompanied by robust governance and risk management framework. The article we present today was authored by my colleagues Giulio Balagattini, Nassim Khelifi, and Valentina Mejdal, who will now present the key findings of the analysis. Their presentation will be followed by a discussion led by Christoph Senfenig, Policy Officer in ESMA Digital Finance and Innovation Unit. We will then open the floor for questions, so we invite you to submit your questions in the chat. With this, I will now leave the floor to Valentina and Giulio for the presentation, and I hope that you will enjoy the presentation.
Thank you very much, Claudia. Thank you, everyone, for joining the webinar. Indeed, the article was authored by Nassim, Giulia, who will intervene next, and I will start this presentation. Claudia already mentioned that compared to our previous analysis, which I mentioned, of course, in the article that is available public, this analysis is different in that it was based on a survey that we conducted together with national competent authorities over summer 2025, covering data for 2024 with an outlook for upcoming years, especially when we talked about investments and plans of the firms which we surveyed. To design the survey, our purpose was to better understand the level of AI adoption, to understand use cases, risks, challenges. We had questions on the type of use cases, the nature, the technology used for this purpose, for which purpose firms decided to use the AI tools. What is their positioning in relation to regulation, specifically AI Act? What is their positioning in terms of allowing their own staff use publicly available generative AI tools? What are their views in terms of future strategies, but also their views on explainability of their tools or materiality of AI use, meaning the impact of AI on the risk profile, on exposure of the clients, or the size of which can be affected actually by AI use, the size of this exposure by firms, so materiality. In these slides, we will present only key findings, not all of them. You've already probably seen the other in the article, but we will focus only on some of them. Also important to mention, when designing a survey, we of course consulted with national authorities, especially those who conducted surveys in their jurisdictions. To align and also to be, complementary to what has already been done. We consulted with the OECD, who also recently published their work focused on the Italian markets, also on evidence which already existed from international standard setters as FSB, IOSCA, and etc. So we use this common template in 15 national authorities, which agreed to conduct the survey, and which also explains also some, the responses we received, sometimes representativeness, sometimes limitations. 15 national authorities decided to participate. And in this collaboration with national competent authorities, because firms are supervised by national authorities, while we at ESMA also distributed this survey to the entities that we supervise, we received 728 responses from entities in our remit, meaning 277 investment managers, investment fund managers, similar number of investment firms. We received responses from 107 credit institutions. In this case, of course, we were interested in banks who provide investment services because we remained only in securities market sector. We received 77 responses from virtual asset or crypto asset service providers, from trading venues and crowdfunding service providers, and also from entities supervised by ESMA and, for instance, 8 CRAs. When it comes to the domicile of the firms who responded to our survey, the majority come from Portugal, followed by Malta, Ireland, Spain, France, Belgium. Again, it also relates to the fact that not all EU member states participated. However, we covered the majority. And then also important factor in our survey is the size of the firms who responded to our survey. You will see in our analysis that the size really matters when it comes to AI adoption. So we asked firms to report the number of FTEs, and for the purpose of this article, we classified them as micro when they counted less than 10 FTEs, then between 10 and 50, it was small firms, then medium are those that are between 50 and 250 FTEs, and then above 250s, these are large firms. Again, this is really definition for the purpose of our article, and we didn't take, for instance, the turnover of these firms when we named them as small or large, etc. And when it comes to the type of firms, largest firm, these are typically credit institutions. Again, reminder, large institutions that provide investment services. And when we look at small firms in our sample, it would be predominantly investment funds or investment firms. What are the key messages or key findings what we've got after analyzing it in the period from September up to the end of 2025 is that the adoption of AI is uneven. Larger firms have embraced AI, meaning that between all the large firms that provided their responses, 96 already use or plan to use AI. When we look at the whole sample, then 45% of 732 respondents reported not to use AI either or in production or in development and experimentation. Compared to large firms, smaller firms reported that they use it AI at a smaller degree. You see 65% of micro firms no use cases reported no use cases. If we look at the sectoral differences, we see that CRAs are leading. 75% of CRAs that responded use AI, similarly to banks. And when it comes to investment firms and investment managers, we see that 63% have no use cases, which again brings us back to the conclusion that size it really matters in terms of AI adoption. We asked firms in our survey about the investments in AI in 2024. And 56% reported no investments in 2024. Again, large firms reported that they did invest in AI in 2024, and that this number compares to 39 and 21% respectively for small and micro firms. We asked also firms to report whether they invest at group level or the firm level, and we see that the firms that are part of a group, at the group level, there is a similar trend of investments. We also asked the firms about the outlook, and 50% of all the firms, of all respondents, plan to increase their investments by 2027. 20 to maintaining, and 30% did not know yet. And we also asked actually the key drivers behind this decision to invest, and we see that they predominantly expect cost savings, efficiency gains, rather than revenue increases when they take this decision about about the future investments. In the survey, we asked firms about the use cases, about their number, whether they were in a production, meaning already a full functioning, deployed, or if they are still developing. We asked firms to also respond to questions such as the technology behind these use cases, and the number, because as you see, we received information about 836 use cases, which is a larger number than the number of respondents, meaning that some firms have more than one use cases. Overall, and we asked for which purposes these AI solutions are actually used. And we observed that the majority of firms use AI for so-called support tasks, which are drafting, data processing, code generation, translation, internal assistance. So they are the cases with low autonomy, with human remaining at the center of this of the processes where AI actually is employed. Few cases of these, few use cases are client-facing, and these cases would be chatbots. We've got responses about 86 chatbots, or for KYC and remote identification. Interestingly, the number of use cases for, let's say, core investment tasks such as portfolio management, optimization, algorithmic trading, HFT, or robo-advising is, so the use AI for these core tasks is rather rare. Maybe related to the fact that firms remain really cautious in terms of deployment of AI for central tasks, and they tend to use it for specific back office tasks rather than a fully fledged core defining almost processes of such of the firms that we surveyed. When it comes to the technology used, I think it's quite something that we expected to receive a response. It's Gen AI, which leads in terms of technology used, and it's followed by natural language processing tools. We also asked about the use of agentic AI systems, a topic which we talk a lot about. Even though if it's also generative AI systems, we still asked firms separately to report whether they use AI systems, which we defined as highly autonomous, highly integrated and automated systems. So basically, the under definition, which is as of today, is rather conventional. So firms reported that 17% of firms, I think it's about 141 firms, reported that they do use agentic systems. However, interestingly, 67% of these use cases are cases of low autonomy. So we still observe that even here, when firms report AI agents, they highlight that the level of autonomy for these use cases is low. Of course, we asked firms about benefits and risks they see in the use of AI. When it comes to benefits, it's very much aligned to the evidence existing as of today, and already highlighted by such standard setters as IOSCO, FSB, OECD, also national authorities, EBA, IOPA. So it's very much related to efficiency gains. It's all what you get from AI, from data analysis, analysis of unstructured and structured data. So it leads to cost reduction, and this is very much aligned with their decision to continue or even increase their future investments. There is also high expectations of benefits in terms of improved decision making, customer support and compliance, reporting. So our responses were very much aligned with the evidence existing as of today. And of course, the questions of risks, they are very much centralized on what it relates to data. So it's data quality, data input, data governance, privacy risks, related risks with models. For instance, hallucinations were highlighted, and just to compare with IOPA findings on their Gen AI survey, they also identified it as the prominent, the top risks in the sector. Cyber risks and reliance on third-party providers also score high in our questionnaire on risks. Firms are also concerned about the lack of skills and resources, and interestingly, large firms are even more concerned when, compared to the broad to the whole sample. High cost is also an issue when we ask about the deployment of AI. Firms are also concerned about their compliance with the existing regulation and also AI regulations. So the compliance risks is mentioned by 45% of respondents. We had a set of questions on AI Act. One of them was whether the firms perceive that they are affected by AI Act, and 76% of which almost all large firms reported that they feel that they are strongly or moderately affected by AI Act. And now I actually hand it to my colleague Julia to continue.
Thanks, Valentina. So let us now turn to the section of the study that looks at financial firms' approach to AI deployment in terms of infrastructure, models, and data. So we first asked firms to indicate the type of AI infrastructure they rely on. So in other words, the computing platforms and the cloud solution they use. So there is a reliance on third-party providers in this domain, which is particularly high for smaller firms. As regards the this AI infrastructure solutions, 62% of respondents indicated relying only on commercial cloud solutions, and specifically 41% relied on a single provider of this cloud infrastructure, while only 12% had some sort of private infrastructure available, and 26% relied on a hybrid approach. This setup again varies significantly by firm size, with 64% of large firms using some sort of private or dedicated setups, versus only 18% for micro firms, which is, let's say, not surprising given the that smaller firms have a different propensity to also to invest in this type of infrastructure, while larger firms may have a larger availability of resources. We then asked firms to indicate the names of their main providers of this infrastructure models for AI. And we observe a substantial concentration in the top AI providers mentioned. Specifically, Microsoft has been indicated as the first, the most important third-party provider of AI solutions for almost half of the firms, followed by OpenAI and then Amazon. Although then there is also some, let's say, interconnection between these services, given that Microsoft provides the Azure platform by which also OpenAI models are accessible. So there are some nuances into this, let's say, division, but we observe a substantial concentration. However, at least some firms also diversify their third-party providers, meaning that 69% of these firms also listed a second third-party provider, and 41% listed a third third-party provider for AI services, which is relevant in terms of diversification of firms' access to AI models and AI infrastructure. Not surprisingly, there is a strong reliance on non-EU AI providers, given that only about 8% of the third-party providers named in the by respondents are domiciled in the EU. Going then to the next slide. We then asked firms to give some details on the type of models that they develop, so the development approach to AI models. And in this case, the picture is a bit more diverse in terms of sourcing of AI models. We see that many firms, again, depend on external models. 36% rely on off-the-shelf models. 15% rely on models that are internally customized but developed externally, and 6% on bespoke models built by external providers. However, we also have 43% of the use cases that firms described where the underlying models are developed in-house. And this is the case especially for large firms, again, and for credit institutions. drilling down on generative AI use cases. In this case, the reliance on commercial models is, as might be expected, high. 81% of generative AI use cases rely on commercial models, and this is the case especially for credit rating agencies and the financial market infrastructures. However, many of these use cases also foresee customization of the generative AI model, either via the retrieval augmented generation RAG or via fine-tuning, which are methods to tailor the model to internal data and internal requirements. Finally, in terms of the training data that firms use for AI models, about half of firms indicated using internal data either for training or fine-tuning models. However, smaller firms again rely more on either public or third-party commercial data. Among sectors, credit rating agencies stood out for their more frequent use of internal data, about 80% of the use cases reported, followed by credit institutions. This might be explained by the fact that CRAs have access to internal data that they collect also due to their particular business of obtaining data from firms, and possibly also because some CRAs are also can also possibly benefit of the commercial data business of the parent company. So we can go to the next slide. This concludes the overview that we wanted to give in terms of detailed results. So let me conclude. So we saw with some summary of this presentation, we saw that while some firms we saw them rolling out AI in core investment activities such as portfolio management and algorithmic trading. However, overall, the uptake of AI in the securities markets appears to be uneven. Specifically, we found that the firm's size correlates with firm's AI approach in terms of adoption, investment, but also in-house capabilities. And this is a more clear explanatory variable than, for example, the sector, the activity of the firm. So with small firms trailing larger peers across the different sectors. Generative AI, newer generative AI tools mostly support operational efficiency in back office activities and only partially in limited cases also customer-facing tools. We see high reliance of firms on third-party providers for AI infrastructure in particular. Although as regards AI model development, the development approaches are diverse and firms seem to be adaptable depending on the type of use cases and the need they have, alternating between off-the-shelf internally developed and fine-tuned models. So overall, these results are also in line with recent evidence from other countries, for instance, that conducted similar surveys shortly before ours. For example, this was the case for Luxembourg and the Netherlands, but also other sectors such as banking and insurance in terms of uneven AI adoption and this growing reliance on third-party providers. So this leads us to assess that integrated EU capital markets and the efforts that are underway to have fewer cross-border barriers might be relevant in this context of AI adoption and innovation, in that they might help allow financial firms to scale up and therefore also scale up their investments in technology and broader AI adoption. So let me stop here for the presentation of the article, and I'll now give the floor to my colleague Christoph, who will offer some reflections and discussion.
Many thanks, Giulio. Hi, everyone. Thanks for giving me the opportunity to also contribute to this survey discussion. Maybe we can go to the next slide quickly. On my side, I work as a policy officer in the digital finance unit and innovation unit in ESMA. So we work on topics around MiCA, DORA, so ICT risks, DLT, anything that relates to innovative technology, so AI, including AI Act and quantum topics. And here I would represent basically the policy and convergence perspective for ESMA. And so let me jump right into this slide. These are a few survey insights that I took out as very interesting when we look at cyber and third-party risk on the left. So we could observe 57% of AI models are developed externally, 41 for large firms. This, first of all, shows already this difference that was previously mentioned, that large firms might have more capacity to develop AI models internally. But even more so, actually, we see 62% of firms rely on external cloud solutions for hosting the AI models. So here, this third-party dependence seems even larger. In addition, also 46% of firms see cyber risks as relevant. All of those aspects, among other things, really reconfirm for us that DORA requirements remain more than ever crucial. So the DORA, for those that are not experts, the Digital Operational Resilience Act has several different pillars that ensure that financial firms take ICT-related risks seriously and manage them properly. One of those pillars is indeed third-party risk management. So firms need to document, to apply due diligence, in some cases have exit plans in place to basically limit the impact, negative impact that third parties could have on ICT risk and their operations. So AI being basically ICT related, obviously this seems more than ever relevant. This is confirming our current work. Then another area is, of course, the lack of AI know-how. So we saw in the survey that 1/3 of firms more or less see lack of skill as a main challenge in AI adoption, which is, of course, a very important thing to monitor if firms move ahead with AI adoption despite lack of skill. In any case, this makes us think of the very much relevance of the AI Act. The AI Act is more a product-focused, cross-sectoral regulation that regulates AI as a product, as I said, very much risk-based. We have prohibited high risk or lower risk use cases in there. In any case, AI literacy in relation to this lack of skill is really one of the main components of this AI Act and also applicable across the risk categories. So it's really something that is key. Financial firms should be able to question AI output, to explain and have effective human oversight in place, basically. So this is again underlining that what we work on currently is more than relevant in this case. Then we also had a look at the use cases that have been brought forward in the survey. So not to go into detail, but 87% of AI models are intended for internal support tasks to gain efficiency and to further automatize the internal processes. And so this shows that as of today, AI models are having a huge impact. However, it's not yet at a very disruptive stage where we would need to rethink all the sectoral rules. As of today, those sectoral rules, and I include also DORA and the AI Act here, seem fit for purpose. In some cases, we need to add a bit further guidance, like we did for MiFID, MiFIR, and algo trading. We recently published a supervisory briefing where we also have a small section on AI rules in there. And this is the way forward we plan to go. We see sectoral rules as fit for purpose, but we complement where needed. And last point here on the slide is the AI investment outlook is of course very positive. So this is a topic that will stay relevant for the years and years to come. So we keep monitoring and apply close coordination with also the national competent authorities. I think we can go to the next slide then. I will just very briefly also take some general lines for the policy and convergence work at ESMA. So for those that are not yet so aware of it, so ESMA takes really an active role to promote sound, efficient, consistent supervision across the EU. And this includes all the texts that of course have AI relevance, AI Act, DORA, but also others. Other texts touch upon AI indirectly. And these AI survey results basically can confirm and help us shape our current policy and convergence activities. So it's very helpful for us, these insights. We can confirm main challenges and risks. So I mentioned a few on the previous slides, but they include also data quality and governance, performance, including hallucination, explainability and black box issues, security and resilience, and as I mentioned, also the third-party risk. And in this sense, yeah, we continue our work monitoring and coordinating work with the NCAs. We also have established a dedicated expert group to facilitate these discussions and really see staying up to date with this important topic. I stop here. Many thanks.
Many thanks, Christophe, for the very valuable policy insights you presented. I think they complement very well with the findings presented by Giulio and Valentina from the article. We'll now transition to the Q&A session, during which Giulio and Valentina will take up the questions you've shared in the chat. Maybe we can start with the first question from Alessandro Pablo. So considering the AI applications observed, such as client-facing ones, have any specific risks being detected in terms of investor protection?
Yeah.
Should
Go
I
on,
take that one? Yes, thanks. So the risk to investor protection, let's say we have not detected, systematically this risk from the answers to the survey, given that in terms of broad trend, the adoption of newer generative AI tools, for instance, in client-facing applications is, let's say, gradual and sort of cautious. However, there can be specific instances, specific risks, and in some cases, our colleagues in the investor protection unit are actually themselves following closely this area as regards the use of AI in customer interfaces, and also, for instance, the potential of unregulated AI trading apps offering potentially misleading services. So this is a stream of work that our colleagues are following, and can also refer you to some relevant publication on that. So maybe we can go to the next one.
Thank you very much, Giulio. A second question from Valeria Gallio. Do they give any insights in how the AI Act affects them, and especially what use cases?
In our survey, the question was formulated as a closed question. So we asked them to which extent the company felt or perceived being affected by AI Act, with options of not affected, somewhat affected, strongly affected, or don't know. And based on this, we actually came up with these statistics. However, when we asked on specific use cases, we also asked whether this use case that they had in production or deployment, how it was positioned and classified by under the AI Act. And interestingly, some firms actually classified their use cases as high-risk use cases, while we know that in securities markets there are no high-risk use cases compared to banking or insurance sector.
Thank you very much, Valentina. The next question comes from Peter Tiffer. What can you say about the use of autonomously operating AI in high-frequency trading, and how do you expect this to influence the risk of flash crashes?
So I'll try to take this one. So again, the study itself, the survey didn't provide much evidence on this specific use case, given that this is the use of AI in high-frequency trading is limited to some specific type of entities. We know that it's something that has been used for some years, so it probably doesn't have to do necessarily with the newer modalities of AI use, such as generative AI, large language models. And again, I think speaking under control of our colleagues in the trading unit, but this is an area that is still considered to be monitored under the algorithmic trading. And there's also been very recent review of algorithmic trading provisions published last week that also makes reference to AI and to the need for firms to also make sure to review and to have tools for the governance of the AI algorithms. So we haven't identified a specific increased risk in this remit for now.
Thank you very much, Giulio. The next question comes from Bodabati Venkatarao. Have observed any AI adoption in middle and back office processes like settlements, reconciliations, matching, and confirmations?
Yeah, on this one, it's important to say that we needed to collect comparable data, and when exactly formulating the question about the nature and what the AI systems were used, we needed to propose a list of options of which firms needed to select. And we had almost 30 positions. When we proposed to firms, they could select multiple. The use of AI for which purposes, and we also needed to make them quite comparatively broad, so it would cover the uses that you just mentioned in your question. So we did not have options, as you mentioned. However, they might be, understood as integrated as in other support tasks. It can be and it was after analyzing it again with our counterparts in the national authorities in their surveys that we came up with we think an exhaustive list which was specific for securities sector. And in this list, we had such uses as pattern recognition, as I already mentioned, portfolio risk management, predictive analysis, investment research, and so on. So your options, they might be included in what we proposed in our questionnaire, and and they are scored as we presented in the survey, in the article.
Thank you very much. Maybe we can next to the next question. So Ken Odonugu, sorry if I mispronounced the name, ask, when does ESMA expect to survey the sectors again? And will there be an expanded focus in the next survey?
Would you like to start?
Yeah, on this, I think this is something we are still, let's say, considering internally, also with internally and with national competent authorities. So we don't have yet a timeline for further surveys, further analogous inquiries for this.
Thank you. And maybe another question from Lindsay Rogerson. Did you ask about the governance of AI? For example, EIOPA's survey found only a minority of firms had policy covering use of Gen AI, and others had no rules around staff self-usage of Gen AI tools.
Yeah, to this question, we asked firms to report, first of all, on the use of their employees or of the publicly available tools for the job-related tasks. And interestingly, the majority of firms reported that they do allow their employees to use public tools. However, many of them do not have any policy or framework to govern actually the use of these public tools. And we also had questions on on governance frameworks, controls, processes that firms had in place to actually to keep the deployment and use of AI applications under control. We proposed options. Many were selected by firms, and we also asked whether in case they had policies, which aspects of the policies were covered. But I think the key conclusions of these responses that we received was that not all firms have established specific policies, specific frameworks, and for AI governance. And again, we linked it a lot, from the point of risks to the fact that many employers are allowed to use AI public tools. However, there is no policy. But maybe this was mitigated by the data we received on the question whether they train the employees on AI and tools. And many firms reported that they do provide trainings of different level. We also had more specific questions on this, which level of training, if it's more technical or just on the use. So many firms reported that there is a policy in terms of trainings. We also had questions on firms' understanding of AI technologies whether the board level, senior level, middle management level, and operation staff level. Interestingly, overall board level was reported as with a high level of understanding of AI technologies. But again, here the key message was that the majority of firms do train their staff on AI topics.
Thank you very much. We can take another question from Valeria Gallio. Did you get any data in the future type of investment firms expect to make and in which areas? And she adds that she's particularly interested in whether you see agentic AI being a particular area of investments.
Yeah, so I can maybe take this one. So we didn't ask specifically to indicate the type of investment firms expect to make. So we cannot just say that most firms, we have this figure, 70% of firms expected to at least increase their overall investment in AI. But as regards AI agents, for sure, from the survey, there seems to be interest around these methods. In fact, we have quite some use cases that were indicated as having some agentic AI flavor. I think 17% of the total. although then this type of use cases might often differ from maybe the expectations we might have around what agentic AI is, given that when we look at the autonomy, the degree of autonomy of the use cases that firms indicated, 7 out of 10 of the agentic AI use cases are indicated as being having either low or no autonomy. So it's still, let's say, I guess, stage in which firms are willing to experiment with the adoption of tools that have the potential to increase operational efficiency and let's say partially automate some tasks, but probably still in a very, very cautious fashion. So that's, but we can say that, yeah, at least the interest around newer AI tools seems to be high, but the transition still seems to be quite gradual.
Thank you very much, Giulio, and thanks to all the participants for the questions. I think we can now close the Q&A session.
I think it's a good time to wrap up. So thanks a lot for your participation.
And yeah, you have our contacts in the article. For further questions.
Thanks, everyone. Have a nice day.
Thank you.